In this video, I'll be going through Work Together Problem 15-3 on journalizing the adjusting entries for accumulated depreciation. This is from our Century 21 Accounting textbook by Gilbertson, Lehman, and Gentene, edition 10E. So all credit given to them for the creation of this problem and this fantastic textbook. So the problem states, using the general journal and unadjusted trial balance from Work Together 15-2, which I put all in this workbook for you guys, and the schedule provided in your work papers, which is this page, your instructor will guide you through the following example. Save your work to complete Work Together 15-4. So don't turn this in when you're finished yet. Keep it for the next one. Number 1, calculate depreciation expense for a color printer costing $950. The printer has an estimated salvage value of $150 and a useful life of 5 years. So, straight line depreciation, the original cost is $950. The estimated salvage value is $150. So our estimated total depreciation expense is $950 minus the $150, and I just click on those. So we have $800. Years of estimated useful life, they told us 5. So we'll put a 5 here. It's really not in dollars. It should be just numbers. And then annual depreciation expense. You would just go equals the $800 and then a slash for divided by. Click on your 5 years. $160 of annual depreciation expense. So we have completed number 1. Calculate the book value of the color printer at the end of its second year of service. All right, so our original cost, again, is still $950. Our depreciation for year 1 is going to be $160, and year 2, another $160, because we're using straight line depreciation. It's the same every year. So the total of the 160 times 2, or this plus this, is $320. And now we would just subtract those to get the book value. So 950 E12 minus the 320 leaves us with $630 of book value left on that color printer. That should be the end of number 2. And now we will need to journalize adjusting entries for accumulated depreciation. So I'm just going to take this over to my general journal. So I have it here. On December 31st, Southside Electric determined its total depreciation expense. The total depreciation expense was $2,150 for office equipment and $7,440, hard to see on this picture, I know, for store equipment. Journalize adjusting entries for accumulated depreciation. On December 31st, so we'll start with our date. We're still doing adjusting entries in our general journal. See, still got that little heading. So, December 31st, what we know is that office equipment, total depreciation for office equipment. So we'll start with that. Depreciation expense, office equipment will be our debit, and accumulated depreciation, office equipment, will be our credit. I'm just going to shorten that since I'm running out of space here. And the amount is given to us here, $2,150. So that's it for the first one. And now we have one more though, because we also have store equipment. So we'll do depreciation expense, store equipment, and indented for my credit, accumulated depreciation, store equipment. And our text told us that it was 7,440. So we'll just put this here. And that will be the end of Work Together 15-3. Not too long, fairly uncomplicated. This is just one method of depreciation, though. This is straight line depreciation, so it's fairly easy at this point. So you can do work together with me here, and then I'm going to let you do on your own